Well, investors woke up to some big losses in North American markets, and I think after the weakness that we had last week, it has many people panicking and wondering if there's more weakness to come. I'm going to give you some answers to that. I'm also going to give you some things to consider about how the media portrays these things. And let's jump into that first. Let's take a look at CNBC.com, and there you've got the headline Dow drops 900 points, and there's a lot of sort of doomsaying type headlines. And then here you've got global market sell-off. You know, for a retail investor, when they read these kinds of, panic-driven, fear-driven headlines, it can make people jump into the market and sell. What is important to recognize is that the media reacts and the market predicts. Now, if you've been on my channel for the last little while, you'll know that I started to be concerned about impending market weakness in June. And in fact, in June, I did a video on NVIDIA where I felt like it was likely to go lower. That was June 20th. Well, since that time, the market has gone quite a bit lower, and now it's really too late to be a seller, at least on this wave of selling, and I'm going to explain why. So let's first talk about when the market first started to break down. And NVIDIA's weakness started the market breaking down right in there, and then we had the general market following suit a couple of weeks later when this upward trend line was broken after hitting a new high. So that's when the market was telling us to sell. Now, last week, we get a weak jobs number, we get rumors or actual disclosures from Berkshire Hathaway that he's been selling, Warren Buffett's been selling a lot of positions. These are the headlines today, but that information is old. What we're hearing about today is things that have already happened. That's why the market started moving down a few weeks ago. So then the question is it going to go lower? Well, you can see today, and this is the NASDAQ 100, see how it's a green candle there? That means that it opened very weak, and it's actually been moving up from the open. And it makes some sense why. And if you understand some principles of chart analysis, it'll make that a little more clear. So let's jump to a short-term chart of the NASDAQ 100. Very simple thing to do is draw a trend line. So you start at the high, and you cut across the tops, and that's basically your downward trend line. As price falls away from the trend line, market gets oversold, which means it's likely to bounce back, and that's what we're starting to see now. Now, bouncing back doesn't mean a reversal of the weakness. It just means in the very short term, we're more likely to go higher than lower because the market's oversold. And what happens is people who anticipated this weakness, they come into the market and they cover their shorts. If they were either buying put options or short the market or buying inverse ETFs, there's all these inverse vehicles for the large cap tech stocks like NVIDIA. You can buy these things. They go up when the market goes down. For example, NVD is one of those. So you've got profit taking in those inverse vehicles. You've got people covering shorts, and you've also got bargain hunters coming into the market saying, hey, I could have bought NVIDIA for $95 right now. It seems like a pretty good deal. So let's take a look at the NVIDIA chart first because it also demonstrates this fact of how markets get oversold. So there was the break of the most recent upward trend line back then. Now back in June, we had another break, and then we had this one in July, and that started this downward trend. Then we had a breakdown from a falling top right here. So that's our next sell signal. There's been all kinds of signals that this stock was going to go lower. I've been telling you about this for weeks. Make sure you're subscribed to the channel. I give out this information for free every week. Don't miss it by not being subscribed. This morning, we gapped down to way down here, just above $90. We're very oversold because we're far below the trend line, and that means we're going to come back up to the trend line. Now, to call the reversal, what we need is the build of a rising bottom and then a break of the downward trend line from a rising bottom. That has not happened yet. So all we have is a very short-term buying opportunity because the market was oversold on NVIDIA and many of the tech stocks. We can take a quick look at Apple as an example, AAPL. And again, drawing just a short-term trend line like this. We open way down here. It can easily come back to here and then continue to go lower as the general pessimism is in place. I'm going to talk about that pessimism in just a moment and why I think that may not last. But for Apple to be good again, to start to resume some strength, we need to build a rising bottom. So this is one low, we build another low here, and then break this downward trend line. That hasn't happened yet, so I don't want you to be a long-term buyer of Apple. This morning there was an opportunity to buy that oversold market. All right, so what is working, or what is happening in the market? You've got concerns about a recession coming, and my video on Sunday was all about this, recession versus crash. So you've got the concerns about a recession because the Fed maybe has been a bit slow to lower interest rates. Other central banks around the world have been lowering interest rates. The Fed's been lagging the rest of the world. So now the market is concerned, okay, jobs market is getting worse. The unemployment rate is getting higher. And maybe with inflation low, the Fed should have lowered. The question then is the Fed going to lower soon? Well, there's a handy little tool to help you with this, and I'll show you how to find it. CBOE, interest rate probability. And then you go to the CBOE website, click on this Fed Watch, and here you will see the probability of different rate cuts at different meetings. So this is the September meeting, and the current rates are 525 to 550. The market is predicting that there's a 16.5% chance that the Fed will lower a quarter point, okay, to 500 to 525. That's 5% to 5.25%. Here we have an 83.5% that the Fed is actually going to lower half a percentage point, which is much bigger than just last week. You know, last week it was almost flipped around this way. It was a much higher probability that there would be a quarter point drop in September, and now it's switched to a half a point drop. So why do I bring this up? Well, because lower interest rates are good for the stock market. Maybe not so important for the large cap tech stocks, which have gone up really well in a high interest rate environment, but for the broader market, it's quite important. And if we were to take a look at the bond market chart, TLT, you can see that it's had this great rally the last 4 or 5 days. If we make this a weekly chart, what you can see is the downward trend line has been broken. Hey, look at that, from a rising bottom. That points to the bond market going higher, probably up to here, and then it'll get stuck. And if that goes higher, that means interest rates go lower. That's supportive for stocks. It could be the thing that gives some stability to the market. What's going to happen is if we get more and more negative economic data, that's going to be the recession story. And that's going to be competing against, are the interest rates going down story? Well, the bond market, this chart TLT is the one to watch for that prediction. And then we watch the stock market chart. We can look at the S&P 500, SPY, and go to a 3-year weekly chart. We haven't broken down from a falling top. Okay, we've come off of a high. For this to really be a market to be concerned about, I would like to see the market go up a little bit, build the falling top, and then break down. If on the weekly chart we get that happening, then I think a more significant sell-off is in place, and I think that the market is then predicting that a recession is coming, and it won't matter that lower interest rates are happening because the market will put its focus on lower interest rates. Now, one more chart before we end. This chart, SPY, is the market-weighted version of the S&P 500. That means the largest companies, NVIDIA, Apple, Microsoft, and so on, have the biggest weighting. And they have been moving down the most because they also went up the most over the last number of months. If we go to RSP, which is the equal weighted version of this index, and make that a 3-year weekly chart, now you see a chart that's not that bad. We've pulled back to support. We're bouncing off of support. I think what's really going on in the market right now is a rotation out of the large cap tech stocks and into the small cap or broader market. And that, as long as the economy doesn't get really bad, that should be good for that broader market of stocks. And I think you're just seeing people taking profits on the high flyers and looking for opportunities elsewhere. Hope you've enjoyed this video. If so, click the like button, subscribe to the channel, and we'll see you next time. Trade well.